Wall Street finally caught a break today. After a brutal week of selling in tech and crypto, stocks ripped higher into the close as traders bet the Fed is inching closer to another rate cut. This is Market Close Daily for Friday, November 21st, 2025. Let's unpack what actually mattered so you're ready for Monday. Welcome back to Market Close Daily, after the bell, before tomorrow. Every episode, we walk through the major index moves, key earnings, Fed and macro updates, sector trends, big S&P 500 movers, smart money themes, and what to watch next trading day. All numbers are based on market close data and triple-checked so you can trust what you're hearing. Closing snapter. U.S. stocks bounced hard to end the week, even though the overall weekly picture is still negative. The S&P 500 climbed about 1% to finish near 6,603. The Dow Jones rose roughly 1.1% to around 46,257, and the Nasdaq Composite gained about 0.9%, closing near 22,273. Even with today's rally, all three major indexes still finished the week down roughly 2% or more, with the Nasdaq logging the steepest weekly drop as investors continued to de-risk out of the most crowded growth and AI names. Macro and the Fed. The main driver of today's tone shift was the Fed. New York Fed President John Williams gave remarks in Santiago that markets interpreted as a mild green light for another near-term rate cut if the economy continues to cool. He emphasized that inflation is moving closer to the Fed's target and that policy can adjust further if the data justify it, without promising a December move outright. That message lands in the middle of a very public split inside the Fed. One camp arguing the weakening labor market needs more support, and another warning that inflation is still too high to ease aggressively. Today's takeaway for traders wasn't "cut is guaranteed," but rather, a cut is clearly on the table again. And that was enough to spark a rebound in risk assets after several painful sessions. At the same time, the macro data that's been trickling out since the shutdown still point to a cooling but not collapsing economy. Softer job growth, rising unemployment, and more cautious consumers. It's the kind of environment where policy missteps matter more, which is why every Fed speech and every data point is moving markets more than usual. AI, TECH, and GRO teach. After getting hammered most of the week, big tech and AI finally bounced, but the move was more of a stabilization than a full-on reversal. The Nasdaq's sub-1% gain lagged the Dow and S&P, which tells you this was not just another buy everything AI day. It was broader, with more participation from cyclicals, housing, and transports. Nvidia and the broader chip complex saw some relief after yesterday's heavy selling, but leadership within tech continues to rotate. Some investors are using strength in the mega-cap AI names to rebalance into other areas of the market that haven't been as stretched, rather than doubling down at these valuations. Sector Roundup. Under the hood, cyclicals and interest rate-sensitive groups led the rebound. Home builders, transports, and selected industrials rallied as easing rate hopes pulled Treasury yields down intraday. That helped fuel a risk-on, but not just tech-only, feel to today's move. Consumer and retail names also participated. Yesterday's blowout move in Walmart helped reinforce the idea that value-oriented retail and grocery are still on solid footing. And today we saw follow-through in off-price and discount plays, as well as in some travel and leisure names that had been knocked back earlier in the week. In energy and metals, the picture was more muted. Crude oil stayed under pressure around the high 50s to low 60s range as markets weighed oversupply and geopolitical headlines. Gold held near recent highs above $4,000 an ounce, reflecting ongoing demand for hedges against policy and political risk, even as equities bounced. Financials caught a modest bid, helped by the idea that a controlled rate cut path might support credit quality while still relieving pressure on the real economy. S&P 500 gainers and losers. Inside the S&P 500, today's gainers list had a clear theme: housing, shipping, and rate-sensitive cyclicals. Names like Ross Stores, D.R. Horton, Lennar, Old Dominion Freight Line, Align Technology, Stanley Black & Decker, HP, Expedia, and IDEXX Laboratories posted gains in the mid to high single digits as traders looked for beaten-up winners outside the crowded AI complex. On the losers' side, the pullback was narrower and concentrated in a few large, previously strong names. Oracle led the S&P 500 decliners, with a drop of around 5 to 6%, while Vistra, L3 Harris, CrowdStrike, Broadcom, Constellation Energy, and Arista Networks all slipped between roughly 1.5% and 3%, as investors took profits and rotated capital into more rate-sensitive and cyclical areas. Deeper cuts and names to watch. For traders, home builders deserve a spot on Monday's watch list. After getting hit earlier in the week on growth and rate worries, stocks like D.R. Horton, Lennar, and related building names rallied sharply today. If Fed cut hopes keep firming and yields drift lower, this group could see more follow-through. But a quick reversal in rates would likely hit them again just as fast. For long-term investors, today's move reinforced a theme we've been talking about. Don't let AI crowd out everything else. High-quality cyclicals, industrials, and healthcare names that generate real cash flow are starting to look relatively more attractive after the AI-driven dispersion we've seen this year. Today didn't change the AI story. It just reminded the market that there are other ways to compound capital. Crypto and metals check. Bitcoin extended its multi-day slide. Prices finished Friday in the mid-80,000s, down another 2 to 3% on the day, and now more than 10% to 15% below the early November highs. Headlines highlighted that nearly $800 billion in market value has been wiped out from the peak as leveraged players and late entrants continue to get forced out of positions. The crypto weakness has spilled into crypto-linked equities and risk proxies throughout the week. But today's equity rally showed that markets are no longer trading one-for-one with Bitcoin. Stocks were able to rise even as BTC continued to bleed lower, which is a subtle but important decoupling for equity traders. Smart money and flows. On the smart money side, the big story hasn't changed much from earlier in the week. Institutional and long-only money is rebalancing, not panicking. Positioning data and recent 13F moves continue to show a pattern where some funds are trimming exposure to the most crowded mega-cap winners, particularly in AI and big tech, while adding selectively to areas like Alphabet, utilities, energy infrastructure, and industrials tied to long-term AI and reshoring demand. We're also still seeing large commitments being made outside public markets: nuclear restarts, grid upgrades, and data center energy projects that will power AI for the next decade. Those won't move daily stock charts, but they're a key part of the backdrop for anyone building a long-term portfolio around the AI theme. What to watch Monday? Looking ahead to Monday, there are 3 big things to keep on your radar. Follow-through versus fade. After today's strong bounce, the first question is whether buyers show up again on Monday or whether this was just a short covering rally at the end of a bad week. Watch how the S&P 500 trades around today's highs and whether the Nasdaq can avoid slipping back into the red. Rate cut expectations. Fed cut odds moved in a more dovish direction after John Williams' comments. If incoming data and any additional Fed headlines reinforce that message, we could see continued support for cyclicals, housing, and transports. A hawkish pushback from other officials, on the other hand, could bring volatility right back. Stress in crypto and high beta. Bitcoin's ongoing slide and this week's damage in high beta tech and crypto-linked equities are still a key barometer of speculative risk appetite. If BTC stabilizes in the mid-$80,000 and high beta names stop making new lows, that would support the case that this week's shakeout was a reset, not the start of a deeper unwind. That wraps up Market Close Daily for Friday, November 21st, 2025. We covered the sharp end-of-week rebound, the Fed's evolving rate cut debate, sector rotations beneath the surface, key S&P 500 movers, the ongoing Bitcoin sell-off, and what matters most as we head into Monday. If this helped you cut through the noise, make sure you're ready to catch Monday's recap. Manage your risk, stay disciplined, and as always, we'll be here after the bell, before tomorrow.